Is there money to be made in sideways markets? No, not really. I can tell you for sure that if you've been unknowingly trading trend-based strategies in sideways markets, you're leaving your success much more susceptible to chance. What can we do to help identify what type of market condition we are actually in? And how can this little fella right here help us figure it out? Markets range for about 70% of the time. That is to say that for 70% of the time, there is no definitive overall market direction. Ranging market conditions are typically caused by indecision from those major market participants, where no one is quite sure what to do next. No one quite knows what the play is, and they may be waiting for certainty from announcements from governments or from real-world events. And so typically, we see markets bounce between really a couple of levels, with buying or selling pressure building up behind. Whilst the market is ranging, you really don't have the volatility to get in, take a profit, and get out. You're really just going to be paying brokerage costs, and in most cases, it's going to be hard for you just to cover the spread cost of the trade. And this is when you're typically going to be sitting in front of the screen with your arms folded, waiting for the bloody thing to move. It's also important for you to note that institutional brokers make their money in strong trending markets, not in ranging markets. You should also know that most new traders that lose money are losing that money in ranging markets. For these reasons alone, learning to recognize the difference between market conditions should be high on your list of priorities. It's not impossible to make money in ranging markets, but if you're just starting out, why not go for the lower hanging fruit? Trending markets, after all, afford us an abundance of buying and selling opportunities. Like I've said in previous videos, in an uptrending market, we're looking to buy at the point which the major market changes direction or phase back to the major price direction on the time frame we are trending. And a lot of the trading strategies bundled inside smart charts are trend-based strategies. That's to say they are specifically designed to be used in trending market conditions only. In smart charts, when you use any strategy, you can examine previously triggered signals. So here's a 180 phase change of strategy chart. These dots right here are showing you the entry, stop loss, and take profit levels of previously triggered trade based on the strategy rules. Now the blue arrow is showing you the direction of the suggested trade. When it's pointing up, it means the strategy suggested a long trade in this instance. The blue dot is the suggested entry level. The red dot is the suggested stop loss level, and the green dot is the suggested take profit level. You can therefore use this tool to figure out for yourself when a strategy has been successful in the past. However, if you do decide to do this, there are a few things you should take into consideration. The first is that these strategies throw up signals regardless of the overall market condition. The 180 phase changer is a trend-based strategy, but a lot of these signals were thrown up whilst the market was in an obvious sideways condition, like here or here. The strategy isn't doing the overall market analysis for you. It's up to you, the trader, to determine the market condition and to verify that the signal is therefore valid in each case. So when you look back over a strategy's previous signals, be sure to factor in the overall market condition the signal was thrown up in. Most of the time you can see this visually. Here is a signal quite clearly thrown up in exactly the conditions we want to see them in. We have two clear previous cycles of higher highs and higher lows, and the signal was thrown up at exactly the right point, where phase 2 moves back into phase 1, just as it's shown in the training module for the strategy. In this instance, we can see that these signals were thrown up when the market is ranging between these 2 points. Would have you have taken these trades? No. When you factor this in, you will note that a strategy's success is dependent on the market condition the signals are thrown up in. For the 180 phase changer, trending markets will yield results. Ranging markets, not so much. You may see streaks of winning trades when the market is trending, and streaks of losing trades when the market is ranging. And that is why step 1 of our 6-step trader cycle, trends, is about recognizing your market condition first and foremost. It really is mission critical. If you're planning to go sailing one afternoon, your first critical step would be to check the weather forecast. The market condition to a trading strategy is exactly like the weather condition is to an afternoon sailing. I want to introduce you to an indicator that can help us identify market conditions, and it is called the Alligator. In fact, of all the smart charts indicators, the Alligator indicator is one of the first on the list, so it's pretty hard to miss. Apply it to a clean chart and the three lines will appear over the price action. Let's talk a little about what these lines mean. In principle, the Alligator indicator is a combination of balance lines or moving averages. The three lines are known as the jaw, the teeth, and the lips. Now, when the jaw, teeth, and lips are closed or intertwined, the alligator is going to sleep or is asleep already. The market is therefore ranging. Remember, ranging markets are what we are trying to avoid here. So this is a signal for us to stay away. The first thing the alligator does as he wakes up is to open his mouth and yawn. As the jaw, teeth, and lips move into their proper position, the alligator is said to be hunting. It hunts bulls and it hunts bears. In this configuration with the lip above the teeth and the teeth above the jaw, it is hunting bulls. That's to say, it is signaling a bullish market. In this orientation, with the jaw above the teeth and the teeth above the lips, it is hunting bears. That is to say, it is signaling a bearish market. The alligator is said to be eating when a candle closes above or below all three lines. Get that? When the alligator wakes up, that's when it's time to go and make some money. So let's have a look on smart charts. So for this demonstration on smart charts, you'll notice that I've set up a new pane of windows called the Alligator windows, and that's purely just for this demonstration. You'll notice the two screens I'm focusing on. The top screen is the higher time frame window, which is the daily chart, and that's the one that I'm going to place the alligator onto, because the alligator then is my higher time frame, and it's going to tell me if I'm in a ranging or if I'm in a trending market condition. Now remember, we want to keep away from ranging market conditions because they won't have the movement to allow us to get in and out of our positions successfully whilst covering costs. And we therefore want to focus when the jaws of the alligator are opening. So the higher time frame window, which is the daily, is the time frame of reference, is the window I will be applying the alligator to. So let me just do that now in Smart Charts to show you how I do that. You'll notice as I look at my list of indicators, it's literally the second one down. If you want to type it in, you can, and it will find it simply by typing in the word. I hit alligator, I place that on my chart, and there it is. So we can see with these lines that are intertwined on the daily, not much is happening. But over the last few weeks, we can certainly, also over the last week or so, we can see that the jaws are now opening. The green line is above the red line, which is above the blue line. So remembering that green line is the lip, the red line is the teeth, and of course, the blue line is the jaw underneath. Now, if you notice, these are daily charts, right? So these are daily bars. This is a daily chart. Below that same currency pair, notice how smart charts, we've got them series linked, red to red. So whenever I click on here, it will paint the window in both windows the same currency pair. So it basically series links those currencies. But of course, in the window below, I'm not looking at the daily chart. I'm looking at, of course, placing a trade and applying a trading strategy. As I told you, I'm looking for trend-based trading strategies. The market we're in right now is very much a trending market with great volatility. So if you look at the chart below this alligator chart, of course, the alligator, if you can imagine now, its mouth is opened. That therefore means we have the ability and should be looking for bullish movement. So the first rule of thumb I want you to remember is that if price is above the alligator, that in itself is a bullish move or is a bullish signal. Don't forget, each bar on here are not daily bars. So this whole section here accounts only for a few days. You've got to understand that each bar here is 4 hours. Above each bar is, of course, a day. So there's much more time horizon, of course, at the top. In fact, just this little area here, if I was to stretch this out, this area here where you can see, if I make it bigger to make it more obvious, probably accounts for the 4-hour window below. So you'll notice as the alligator on the daily chart is opening its jaws, it's opening its lips, and it's opening its teeth, we'll notice therefore that the signals start appearing on the 4-hour chart. Notice this. the 4-hour chart window, if you look directly below, suddenly the signals, those bullish signals. Now remember, you've got a strong signal when the lips, that's the green line, has crossed both of the other lines. And often when the candles are far away, like they're becoming here from these lines, we really say that's a good trade open position. So if you're in a position like, for example, here or here, the probability of you capturing a profit is good because, and if you're in a position that's running whilst those candles stay north of those 3 lines, it suggests that market is strong in your favor in that direction. Certainly not a time to be closing the trade. And therefore, we look to then manage that trade by adding an ATR 10, for example, and we kind of double that ATR 10, and then we deduct that from the entry level to tell us where to place our protective stop loss. We don't even really need to do that, even if we're using a 180 phase changer strategy, because as we know, the 180 phase changer strategy has all of those 3 orders connected to it. It knows the entry signal, it knows the stop loss, and of course, it knows where to put the take profit. So just looking at a couple of these examples where the jaw is open, suddenly where it's been flat, there's been no signals. Back here, just up. Look how you get mixed signals. But then with the jaws open, we now have a clear trend direction. It's a bullish trend direction. And then the strategy, notice the 180 phase changer. I could be using a trend wave type strategy here as well, because of course that is a trend-based strategy. You'll now start noticing that these strategies, when used in combination with the Alligator, show us when we should be trading, when we shouldn't. So let's just flick through a few of these. On the long side, I'm going to look at Aussie dollar now. Again, you can see here is when it's intertwined, which would be way back here where the signals are erratic, up and down, up and down. We want to make sure that those signals are strong and clear. Alligator's going to help us there because they tell us, look, price bars are well above. You can see it's crossed a few days ago. In fact, it's as many as 2 weeks ago, shall we say, in trading terms. The Aussie dollar has clearly opened its mouth. The Alligator has. The price is above. And you can see, if we then look at the corresponding 180 phase changer on the same currency pair, on the 4-hour window, or even the 1-hour window, you're going to see that those signals, whilst now crossed and moving up, is giving stronger signals. Profit, 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 profit. So we've got some decent trades here consistently. You should then see 180 phase changes kicking out profits consistently with that movement. It's when we've got a disagreement, when, for example, the Alligator is sleeping, when the jaws are closed, that's when we're going to get mixed signals thrown up on our strategy charts of our lower time frames, the 4-hour and the 1-hour, because of course you haven't got the jaws open from that higher time frame. So really, really simple, effective, and clever strategy. If you could delete half of your losing trades, you would find that your trading account looks considerably better than it currently does. You'll find this strategy will help you do that, or should I say this indicator will help you do that. What it's going to do is just going to remove those false trades, those ones you shouldn't have been placing, which were trend-based strategies on ranging markets. So let's have a look at a few more. So let's look at the euro dollar now. Again, same system. You can see the jaws are open, and now you can look. From the jaws being open on the daily over the last, you can see clear phase 1, phase 2 pans here. But on that phase 1 resumption on the euro dollar, just look at the number of phase changes that have kicked in. 1, 2, 3, 4, 5, 6. 6 trades out of 6, all profitable. Why? Because we're using the combination of the Alligator to tell us it's a trending market condition. We're using a strong, back-tested trading strategy based on trends. Again, it's the 180 phase change we're looking at here. But we're perfecting this because we're getting ourselves away from trades where the Alligator's jaws are closed. If we do that, we know in ranging market conditions, we are going to make money. Now let's flip it on the other side and look at, of course, we can use it so we know that when price is below the Alligator, that is a bearish condition. We know that when the lips, that's the green line, is crossed back down through both of the other lines, that is a strong bearish signal. So let's take a flip at that for a second. Let's look at, for example, the Euro Aussie. So look, so now I'm looking at a bearish version of the Alligator. We can see here on the Euro Aussie, okay, just opened up that mouth, and we can see that corresponds exactly with the 180 phase changes that are being called correctly and are allowing us to get in and make a profit. You can see that nice phase 1 movement of the Euro Aussie is completely consistent with those jaws opening up. So ensuring we look at this to keep us away from ranging markets and make sure we're focused on using trend strategies in a trading market is going to be powerful. Remember, we use the Alligator on a higher time frame, and then we enter our trades on a lower time frame. So if you're trading a 180 phase changer, you're looking at a 4-hour chart, you're looking at a 1-hour chart, and you're potentially looking at a daily chart, very similar for the trend wave too. But your upfront higher time frame, if you're on a daily chart, you're looking weekly. If you're looking at hourly, which is 4-hour, 1 hour, you're looking at the daily chart. Best configuration for me, daily chart tells me exactly what that major market condition is, and therefore that is the market frame of reference I'm going to be applying my Alligator. And then I'm going to be using 180 phase changes, trend waves, and they will tell me when to enter the trade or when to enter the trade, because I'll know already the jaws are open and I'll know that we are trending and we are not moving sideways. Take note of the long-term trends to increase a better risk to reward ratio. And don't forget, always we use that 200 moving average on our chart to tell us, is this market uptrending or downtrending? So let's have a look at a couple more here. The Euro Aussie, you can see, is consistent. Mouth is just opening on the daily, which corresponds to many of those 4-hour lines, which you can see they've started kicking in here. So these are smart trades. This one being placed here, you can see it's nearly hit its profit target. When the jaws are open and the strategy matches in the lower time frame, you're going to see the stars start to align for you. And for that, I think you're going to find this to be a really important session to add to your trading arsenal as we now go into decent or better volatility and more trending market conditions. Let's look at the sterling Aussie as another example of a bearish movement. You can see here, look, the jaws have been open some time. If I go back here, they were opened here, you notice. So back here in days, it's been open for some time. And just look at the impact on that 4-hour chart. I mean, if you look, this is a trade 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades out of 11. Notwithstanding, maybe one in the middle there might have got pinged. But you're looking at maybe 10 trades or 11 trades out of 11 are profitable by using this simple Alligator strategy combined with a lower time frame trading strategy applied. And that's a 4-hour and 1-hour chart. So there you have it, the Alligator indicator, one you may not have used in the past, one you can now see is critical in helping you understand whether you're in a trend or not. Remember, 70% of the time, markets are not trending, they're ranging. So the identification of that mouth opening and getting into those strategies on the lower time frame whilst the mouth is just opening. Remember, the beginning of that opening of the mouth is the best place to be placing your trade. So it's a real identification of the market condition tool, and that is critical. I just want to say thanks to Bob, the Alligator, here for joining us in the Trading Den, and I look forward to seeing you next time.